It's not an accusation, it's a fact. After the Trump tax cuts passed, billions upon billions of dollars have been used for shareholder buybacks in large public companies across the United States. And in the speech that I gave, I showed that those buybacks are accompanied by, at the same time the company buys back shares, the executive sells into the buyback. Now, we were clear in the speech that that's not necessarily insider trading or fraud, but it is troubling because when an executive does a buyback, they're suggesting to the market that the stock is cheap. And the question I'm asking is, if the stock is cheap, then why is the executive selling into the buyback?
That's a valid question, and I've been kind of kicking it around, trying to see what I think about the entire situation. I mean, I look at it, and there have been so many companies that have basically just had buyback programs that have run endlessly for years at this point because there were so few other places that executives thought that they could go in terms of where to put the company's money. And you know, I just wonder if that means that they could never buy or sell the shares that they've been given for compensation.
Well, let's just be clear about something. Executives are going to be paid in stock, and there's going to be a time and a place for them to sell those shares. The argument that I'm making is that a buyback is not necessarily the right time and place to dump your shares into the market. And let me just say something else. My study is very preliminary, but it's part of a big, broad academic discussion that's been happening for years about executives' incentives. Last year, in the Review of Financial Studies, a top peer-reviewed journal, Alex Edmonds, formerly of the Wharton School, he's now advising the United Kingdom's government on buybacks, made the same point in a very similar study. He showed that when executive shares vest that they get in compensation, they're much less likely to make long-term investment. They're much more likely to engage in a buyback. Look, governments around the world are thinking about this question, and we should be too.
Is that an argument for companies paying executives simply in cash and not giving them any stock? Because the reason that they give some stock incentive is you want it aligned. I can understand your point that if they sell it, they're no longer aligned anyway. Or is that an argument for a longer holding period?
Oh, you're right. That's an argument for a longer holding period. And that's why what I did in the speech was call for an open comment period about our buyback rules generally. And the question I want to ask when we look at our buyback rules is, are we undermining executive incentives to manage for the long term? You know, there's a lot of corporate managers out there. I don't need to tell you. I know they come on this show and say this. They say we're pressured to act in the short term. And I guess my question is, if you're feeling pressured to act in the short term, then when you do a buyback, why don't you put your money where your mouth is and hold your shares for the long term?
Are you going to back this up with rules, hard and fast rules, or is this just a recommendation at this point?
Oh, well, what I've done is called for an open comment period on our rules on buybacks. And I want to say something about that. Whatever you think about buybacks, good, bad, I've heard all the arguments. We haven't touched our rules in this space for 15 years. And my own view is it's just not good government to leave our rules governing billions upon billions of dollars in stock transactions every year untouched for 15 years. I think we should take a look at these rules now.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.